Hey everyone, and welcome back to the channel. Today, we're diving deep into a topic that's been on everyone's mind, cryptocurrency. You've probably heard the stories, people making fortunes overnight, the incredible hype, the feeling that this is the future of finance. And while it's true that crypto has created amazing opportunities, it is also a world filled with significant risks that you absolutely need to understand before you even think about investing a single dollar. This isn't about scaring you away. It's about equipping you with the knowledge to make smart, informed decisions. So, let's cut through the noise and talk about the real dangers lurking in the crypto market. First and foremost, let's talk about the elephant in the room, market volatility. This is the big one, the rollercoaster ride that defines the crypto experience. One day, a coin's value can shoot up by 50%. The next day, it can plummet by even more. We've seen it happen time and time again. Bitcoin, the king of crypto, has experienced massive price swings, going from all-time highs to deep corrections in a matter of months or even weeks. These dramatic price movements are driven by a mix of factors: news headlines, tweets from influential figures, shifts in market sentiment, and pure speculation. Unlike the traditional stock market, which has circuit breakers and is often more stable, the crypto market operates 24/7 with far fewer regulations. This means that your investment could be worth a fortune while you sleep, or it could be cut in half for new investors. This can be an incredibly stressful and financially devastating experience. It's easy to get caught up in the FOMO, the fear of missing out, and buy at the peak, only to watch your capital vanish in a market downturn. That's why the number one rule of crypto investing is never, ever invest more than you are willing to lose completely. Next up, let's talk about security risks. This is where the digital nature of crypto presents a unique set of challenges. When you own traditional assets like stocks, they're held by a brokerage firm under heavy regulation. With crypto, you are often your own bank, and that comes with immense responsibility. One of the biggest threats is hacking cryptocurrency exchanges, where most people buy and sell their digital assets, are prime targets for sophisticated hackers. We've seen massive, high-profile exchange hacks over the years where billions of dollars worth of crypto were stolen, and in most cases, that money is gone for good. There's often no insurance, no government bailout to get your funds back. Then there are personal security risks. Phishing. Scams are rampant. You might get an email or a message that looks like it's from a legitimate exchange, tricking you into giving away your login details or private keys. Your private key is like the master password to your crypto wallet if someone gets it. They have full control of your funds. There are also countless scams disguised as new, promising crypto projects. They're often called rug pulls, where developers create a new token, hype it up, get people to invest, and then disappear with all the money, leaving investors with worthless tokens. It's the Wild West. And you have to be constantly on guard to protect your assets. Another major risk that often gets overlooked is regulatory uncertainty. The rules and laws governing cryptocurrencies are still being written, and they vary dramatically from one country to another. This creates a huge cloud of uncertainty for the future of the market. One day, a government might announce a favorable policy, causing prices to soar. The next, another country might decide to ban crypto trading or mining altogether, causing a market crash. We've seen this play out with China's crackdown on crypto activities, which sent shockwaves through the entire industry. Governments are grappling with how to handle crypto, how to tax it, how to prevent its use in illicit activities, and how to protect consumers. A new regulation from a major economic power like the United States or the European Union could fundamentally change the value and utility of certain cryptocurrencies overnight. This regulatory risk means you're not just betting on the technology. You're also betting on future government policy, which is notoriously unpredictable. This lack of a clear, stable legal framework adds another layer of volatility and risk that investors in traditional markets don't typically have to worry about. So, what does all this mean for you? Does it mean you should avoid crypto entirely? Not necessarily. The point of this video isn't to create fear, but to foster caution and encourage education. The allure of high returns is powerful, but it's balanced by equally powerful risks. Before you invest, you must do your own research. Don't just rely on a friend's tip or a hyped-up post on social media. Understand the technology behind the coin you're interested in. What problem does it solve? Who is the team behind it? Read the white paper. Look into the security of the exchanges and wallets you plan to use. Start small, and as we said before, only invest money you can afford to lose. Diversifying your investments is also key. Don't put all your eggs in one crypto basket. The world of cryptocurrency is fascinating and has the potential to be revolutionary. But it's also in its early, chaotic stages. Navigating it successfully requires a healthy dose of skepticism, a commitment to continuous learning, and a very steady hand. Treat it as a high-risk, speculative part of your portfolio, not as a guaranteed path to wealth. Stay informed, stay safe, and invest wisely. Thanks for watching, and if you found this video helpful, be sure to hit that like button and subscribe for more content. See you in the next one.